What's up, you guys? It's Matt here. So I haven't done one of these in a while where I go through, investing mistakes that people make. Now, I just talked about a big investing mistake and really how everybody's investing wrong in most cases. And we will get into one of those points within this video. But that really brought to my attention that one, I haven't done one of these in a while, talking about these investment mistakes, and two, that there's more that needs to be said about investing either in the crypto market or in the stock market or wherever you're investing. So we're definitely going to take some time to break this down and give you my insights here. Hopefully you guys take it in and don't take it all as being 100% in what you're doing in every situation, because you need to break down all these different situations, and sometimes you may be doing this, sometimes you may not, sometimes you learn from all of those things. It's very difficult to gather if you are doing it correctly 100% of the time, and nobody's 100% correct. Nobody's always right. I make these mistakes too. I still do, where and I'll talk about it, right? Because I'll be giving them away. Anyways, make sure you guys hit the like button, hit the subscribe button, hit that notification bell for more videos like this one. Also, if you guys want to check out some of the links down below, you can definitely check out those links, as well as following me on Twitter at Perry8K. You can follow me over there. But I wanted to talk about 3 investing mistakes that everybody's making, right? There's a lot of investment mistakes out there. You can literally get down to saying this pattern is the wrong thing to look at, and investing and on this day, on this month is the wrong time to do so, right? There's a ton of investment mistakes that people can make, but I'm going to give you some ones that I noticed that I've done quite a bit and realized that it was a mistake, and learn from it. So let's start with number one. Number one for investment mistakes is buying on green days. Now, I talked about this in my previous video. A lot of people will make this mistake without even knowing it. You see a green day, so many people are telling you, hey, the market is running. We need to buy right now. We need to get in this right now because everything's going to skyrocket even more. If you see things that are up 50% and 100%, most likely it's not going to continue to run. I mean, there's a chance where things can continue to run and see it up, 200% and 250%. The chances of that are probably slim to none, right? You can see it to where it's 1 out of every 50 that run like that are going to continue to run. Probably all the rest of those are going to start to fall down, going to start to find a resistance, pull back, increase a little bit, thinking that you found a bounce, and then it's going to fall back some more. You always have that push up, that pump, and then it's going to dump down to a certain level to where it can resist, maybe around a certain indicator, whether it's a 200 EMA or it's a 15 moving average or whatever it is, the VWAP. It bounces off of that, increases, and then falls again. So people will invest at the wrong times on the wrong days, and I see it time and time again. People come in the chat and they're like, hey, this is moving. Should I buy this right now? And it's like, why didn't you ask me that when it was down 50%? Why do you ask me that it's now up 50%? That's a big issue. That's a big problem if you're not going to be able to invest in these red days. And I understand some people don't have money, but you still should be asking the question on the red days is, when should you buy? And the answer is that we need to buy this at the lowest point possible. Buy low, sell high. And what a lot of people do, and what's ingrained in their system, is they buy high and they sell low. And it's, in my mind, the reason why it's ingrained in their mind is because we've been told throughout life, and it may be a business strategy for normal retail investors, is that you go on green and you stop on red. I mean, it's as simple as that. You look at that as red being bad, green being good. So people will invest in the green. They will feel up when it's green. It just makes you feel better. I notice it in me. I feel better when the market is green, but I know that I'm only going to invest or try to invest when it's in the red. But I've been caught in a couple of cases trying to ride the wave, and the wave is kind of over. So make sure you're not investing on green days and you're trying to invest on red days. In the crypto market, in the stock market, wherever you're investing, try and invest on red days. The next thing that I have on my list is following or mirroring somebody's portfolio, right? There's a lot of people out there that will come out and say, hey, I follow the Warren Buffett strategy. Okay, that's great that you follow the Warren Buffett strategy. What's your overall plan for everything in the end, right? You may follow his strategy to a T, or you may follow my strategy to a T, or you may follow Graham Stephan or whoever, right? And when you follow that strategy, you don't have the same mindset that that person has, right? When you're going to sell, if you're ever going to sell, when you're going to take some sort of profit, right? What's going on through their head is not also what's going on through your head, right? It's so difficult to pinpoint that. And I've noticed this quick because I will go and be like, oh, what's this person investing into? They invest into it. And by the time I check back to see what they're doing with this position, they already sold it. They already got out of the position, made their profit. And I realized that I made a mistake because I am not them. I have to develop my own strategy. And you're not looking to just mirror somebody's portfolio. Now, I'm not saying that you physically can't copy the investments that people have. The idea is that you want to make sure that you have your own strategy after you buy it, or even before you buy it, right? If you're looking at a position and somebody says, hey, buy Amazon or Tesla, right? And Tesla's at a certain price, you buy into it. You want to make sure that you have that strategy built up and know when you're going to sell when you do buy it. If it's something that's long-term, if it's a growth stock for you, or if it's something that you're going to turn around and sell within 5 minutes, right? You want to know exactly when you're going to get out and not look at when they're going to get out. People ask me all the time, when are you going to sell your position? Well, I can tell you when I'm going to sell, but it's at a certain price point. And if you don't see that price point, you missed it, right? And that's where it ends up being very difficult. So make sure you're not mirroring somebody's portfolio, mirroring somebody's activity because you don't think the way they do. And the last thing that I have on this list, which is probably the most important piece of investing by far, in my opinion, is being disciplined. People will look at profit for months and say, all right, it hit my profit target, and they will not sell. Why will you not take profit if it hit your profit target? If it's a profit target that you had for a swing trade, and let's say it was a position where you were looking to gain $1,000, you gained that $1,000, it increased to 1,500. Okay, well, you gained what you wanted. Why are you not getting out of the position? Well, because it has a little bit more potential. Okay, well, take your initial investment, protect your investment, keep what's in there, and then see when it does come back, then you can maybe buy into some more if you wanted to. But you need to play your strategy the way that you had it, or at least adjust it a little bit. Don't completely abandon it and say, well, other people are holding on, so I'm going to hold on as well. You need to be disciplined with what you're doing, especially if you're getting into day trading or swing trading. If it's a long-term investment, a lot of times that's you're holding on for the long term to where you're going over multiple recessions and periods to where it's a bear market, a bull market, whatever, right? That's really the long-term aspect of it, and you're looking for the overall outcome of the market to be positive, a net positive. But when people say, hey, you know what? I'm not going to sell this position now. I'm just going to hold on to it and see what it ends up being. Well, that's dumb. That's the dumbest thing that I've ever heard. You need to make sure that you take your original plan, and if you're going to adjust it a little bit. Take your original investment instead of taking all your profit, and then see what happens. If it continues to run, you still gain something out of it. If it does pull back all the way, well, now you didn't risk anything more than what you had in profit, and now you can put more in there if you wanted to. So be disciplined, be better when it comes to investing, because that's all you need to do. That's literally the most important piece, is being disciplined. I've learned that in multiple books, but that's what I have for you guys. 3 mistakes that people are making. These are not the only mistakes. These are just 3 more mistakes. Don't buy on green days. Don't mirror or follow somebody's portfolio, and also be disciplined when it comes to investing. That's it, guys. Let me know what you think about these different tips that I have here. And let me know what you think about these videos, because I haven't created one of these videos in a while. Hit the like button, hit the subscribe button, hit the notification bell for more videos like this one. Also, if you guys want to check out some of the links down below, check out all of those links. And if you want to follow me on Twitter, @Perry8K, you can follow me there. I'm going to get out of here, and I'll catch you in the next video.